Hey, stop scrolling. Take a good look at your bank account. Do you use an SBI, a Canara Bank, or a Bank of Baroda, or perhaps any of the other public sector banks? If you do, or if you plan to, this video is very critical for you. Welcome to Wallah English YouTube channel. This is Akshara. India's finance minister has announced a massive game-changing plan to merge our public sector banks, bringing them down from 12 to potentially just 8 or 9. The goal? To create world-class big banks. Why this huge shakeup? And more importantly, what does this mean for your savings, your loans, your local bank branch, and even your IFSC code? Stick around because we are going to break down this major financial shift, tell you which banks are likely to remain, and reveal the surprising advantages for you. So let's get straight to the core of this major announcement. The government's vision is both simple and incredibly ambitious. India needs financial giants. The finance minister says it clearly, we need world-class big banks. This isn't just talk. This is about making Indian banks globally competitive. Right now, HDFC Bank, a private sector bank, has already broken into the top 10 global banks by revenue. The government wants more of our public sector banks to achieve that kind of international standing. This isn't a new strategy either. Look at the history. In the last 10 years, the government has already successfully reduced the number of public sector banks from 23 down to 12. This current plan to bring them down further to 8 or 9 is simply the next logical step in a 10-year roadmap for strengthening India's financial backbone. They are already in talks with the RBI and the banks. So, this is actively happening. If the goal is favor bigger banks, the most pressing question for you is my bank one of the survivors? Or will it be merged? Currently, these 12 PSU banks control a massive 55% of the nation's banking. That's a huge chunk of our financial ecosystem. While no official list has been released, financial experts and industry reports are pointing to 5 key banks that are likely to remain as the core, either staying independent or becoming the lead entities for mergers. The undisputed giant is State Bank of India, SBI, with a staggering 26% of Indian banking owned by SBI. It's not going anywhere. The other strong contenders likely to form the core are Canara Bank, Bank of Baroda, Indian Bank, Bank of Maharashtra. This consolidation effort is moving quickly. Reports suggest that the government aims to finalize this, most probably before the budget sessions. So these changes are imminent. Now, you might be thinking, what does a bank merger mean for me? The truth is, these mergers bring significant advantages, not just for the banks, but for you, the customer, and for the entire Indian economy. First, these larger entities will have stronger balance sheets and improved asset quality. Experts confirm this is already happening, making them more resilient to economic shocks. This translates to a greater stability and trust for your money. Secondly, bigger banks can give larger loans. This is crucial for funding massive infrastructure projects, supporting large industries, and boosting overall economic growth, something smaller banks might struggle with. From a regulatory perspective, having fewer banks means the RBI will have to manage only less banks. This streamlines supervision and oversight, making the entire system more efficient. And for you, the customer, these globally relevant banks will mean better technology, broader service offerings, and potentially more competitive products as they aim to compete on an international stage. Despite interest rate fluctuations, remember that deposit growth has been consistently strong in these banks, indicating continued public trust. These mergers aren't happening in a vacuum. They are part of a broader, bolder reform agenda to modernize and strengthen India's banking sector. One of the most significant changes proposed is allowing more foreign investment. Currently, the limit for foreign investment in government banks is just 20%, and the government is now considering raising this significantly, potentially up to 49%. This could bring in a massive influx of capital, technology, and global best practices into our PSU banks. Another crucial reform already implemented is having private sector employees on PSU bank boards. This injects fresh, modern management thinking, technological expertise, and a dynamic approach into traditionally public sector run institutions. The finance minister stresses that the government is building a dynamic ecosystem specifically designed to support the efficient functioning of these new larger banks. It's not just about consolidation, it's about creating a robust framework. Amalgamation is just one way they are achieving this bigger vision for financial strength. So, to wrap up, the Indian government is making a huge strategic bet on scale, stability, and global competitiveness. The goal is clear: fewer but much stronger, bigger, and globally competitive banks that can truly support India's economic ambitions. What does this mean for you? And what should you do right now? While your money and core account services are safe, a merger will bring practical changes. You will need to watch out for changes to your bank's name, your IFSC code, new passbooks, and potentially the location of your nearest branch or even your locker details. The good news is that the RBI and the banks manage these transitions smoothly, providing ample notice. Okay guys, that's it. If you liked the video, don't forget to subscribe to Boss Wallah English YouTube channel.
Boss Wallah. Be the boss.